Well, hey there. Good morning, everyone. Happy 4th of July. And welcome to Crypto and Coffee. We talk about crypto, we drink about coffee, and you're watching us here on Decentralized TV. I'm the Data Lord. I'm a weird guy. I talk about Bitcoin and stuff. Glad you're here. So, now that I've made that sufficiently awkward and I hope you're feeling great, let's take a look at our markets, shall we? Looks like Bitcoin is up 0.4% for the day. Ethereum up 0.26% for the day. We have Ripple Nipple at 0.5 up for the day. Dogecoin almost up 1% for the day. And Litecoin down 2%. Little retrace. Polkadot up 0.26%, Polygon up 2%, and Bitcoin Cash down 3%. So a few things we want to pay attention to is what happened in the last week, because really holiday weekends, it's no surprise people typically chill out. They're doing other stuff. They're not looking at the charts. They're grilling hot dogs and celebrating freedom and things like that. So hopefully you're doing also festivities like that to celebrate your Independence Day. And remember that really patriotism at the end of the day is just love for neighbor, right? You love your neighbor as yourself. And that's fundamentally what it is, and it's healthy. Patriotism, when it's unhealthy, becomes tribalism. So let's not do that. But if we look at over the last 7 days, we can see a bigger picture. Bitcoin Cash ripped 47% in the last week. So my guess is people really didn't think much of Bitcoin Cash, but because it's proof of work, it's a fork off of Bitcoin, I think it was given the okie doke as a commodity and not a security. And exactly because of that, people threw a bunch of money into it because they knew they could make a big disparity. I don't think it's going to be a good play long term, but for right now, that's why it's up so much. Same with Satoshi's vision. Everyone knows that's actually a piece of crap that Craig Wright's a crazy person, but it's still up 30% just because people are trading altcoins on that whole concept of like confidence in something being a commodity versus a security. Litecoin in the same right is a commodity, not a security, it seems, and is up 23% for the week. So if you're following what I've been, I feel like I gotta sneeze again. No, help me, help. Also, I turn into a character from Samurai Showdown on Sega Genesis every time I sneeze, so I apologize for that. Hopefully, you know what I'm talking about. If you don't, you should check it out. That game's dope. It's a really good fighting game. So Litecoin, I'm paying attention to it because we have a halving coming up on August 2nd for that's less than 1 month away for Litecoin. So we expect always to have big run-ups in price prior to a proof of work going through its halving. So that is kind of the story I wanted you to see in the markets. Also, I suppose Solana, you can see it's still hanging in there. We got some news on Solana. That's pretty cool. So let's get into the charts real quick too. And we'll look at that angle. And you can kind of see where I'm looking at the charts. And if you're compelled by any of it, then make your own investment decisions. Not financial advice. I'm just showing you kind of how I'm looking at the charts and what I'm doing and sharing my experience there. I got sneezing again. Why? Why does this always happen? It's like my allergies wait till I'm like on stream and then they're like, ha, I got an idea. Like every time. So looking at Bitcoin, these are day candles, right? And we'll zoom that out a bit. So with day candles, you can see we've moved through this 140-day section almost completely, right? And why am I looking at 140 days? It's the average. So from bottom confirmation to the end of that cycle, we have 147, we have 70, which is basically half of 147. We have 112, which was cut short a little bit from 147. We have 77, we have 84, we have 140, which is 2 times 70. We have 126. So we tend to see around 60 day to 70 day or double that. And so we're kind of approaching that type of trend. Like 140 days would be the typical like long run, 147, I suppose. And so what I want you to pay attention to is that if we were to take this to August, 4th, that becomes 144 days. But August 2nd is the halving of Litecoin. And so I'm just looking at this like current Bitcoin cycle where we had confirmation right here where we had a run up. We kind of bottomed out right here on March 11th, right? This run I really expect to terminate right around Litecoin's halving, because whatever price action's happening on Litecoin, typically what people will do is when there's like a news driven event, they'll take that money, they'll put it into some other coin, either for a run up to get off the exchanges, or they'll move it into Bitcoin to lock in profits for that to have a run up too. So that's why I'm paying attention from Litecoin. I expect people to move money either into Dogecoin because it's really cheap transaction fees and it's also on the script algorithm. Same miners have both Doge and Litecoin. And then after that Doge run up, I kind of expect them to move that money into Bitcoin because people are bullish on Bitcoin long term. Bitcoin's the whole reason we have this whole crypto industry. And I think everyone knows that. Everyone's aware of that. Everyone pays credence to that in their actual trades. Whether or not they do it in their public speech is different. But do know that really I expect something to happen, between now and like the second week of August, honestly. Like right in that 160 days, because again, we have precedent for that if we do a double a double section like 147, it's like right around August 7th, right? So that's how I'm looking at the patterns, right? The patterns of how long it takes from bottom confirmation to end of that run, end of that cycle. And we're kind of running sideways right now on Bitcoin itself. But if we were to look over at Litecoin, let's say, you can see we've been cracking into this big wedge here, getting pressure. We slipped out of it with a breakout, which we expected to see. And now we're seeing retracement. So we move from the day view down to more like a 4-hour, and you can kind of see what's really happening here. We just have this channel that's being formed, right? We're moving along that ridge and that ridge, and we're probably just going to ping pong inside that. Boop, 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 until we kind of hit a top. So just pay attention when we do have retracements. You may want to increase a small position. You may want to have some money in Doge or something like that, under the expectation people will move that profit from Litecoin over to Doge. And you may want to have some Bitcoin for sure. Just to make sure that if people slip this Litecoin profit over into Bitcoin, you capture that win too. And even then, Bitcoin's just a fairly good entry point. Like anything under 31K right now is a good pickup in this current channel we're at, right? Because you can see like 31s right here. And we have little tiny wicks that break above 31, but we really don't go much higher than that at the moment. And then anything at you can see right at 3, people are basically using that as a psychological boundary. Yeah, we have wicks that go just below 3 or 30K. Yeah, we have some wicks that go just above 31K, but everyone knows that that's kind of how people are thinking of it. 30K, 31K. And so you could probably play this channel if you want to. Do I think we retrace? Hard to tell, honestly. Really, really hard to tell. I'm sure if we were to look at some big macros, we could tell more from that. But we have an article on that we'll cover in a moment here, and then let's take a look over at Doge as well, and you'll see what I'm talking about, like why Doge is kind of primed for gunpowder. You can see we've had this bottom channel we've kind of been running in as a support. Well, we're underneath it right now, and so really we have amazing pickups right now. If you want to buy Doge, you can get quite a big bag. And people, I'm telling you, I have high degrees of confidence that people are moving their Dogecoin profit or their Litecoin profits over to Dogecoin. I don't know when, but I really think that's going to happen. And if it does, then we stand to gain some pretty serious ground here. Like if we look at, if you were to pick it up today and it was to go up to like these candles over here, that is 135, 120% or so. And these are not unprecedented levels for Doge to go to. If we go up here, you're looking at like 400%. If we do all-time highs or whatever, it can get stupid quick. So I recommend you just look at the charts, see what persuades you, and make your own educated financial decisions. But I think we really do have some opportunities here to play some pretty predictable behaviors. So that is my update for the day. Hope that's been useful to everybody in the club. If you would go ahead and throw a what's up in the chat. It's always good to give a shout out to the people hanging out in the morning. So I'm going to get into the stories. Shall we? Also, hope you got your coffee and hope you got, a good attitude. Crunchy. So our first article for the day, if I can find it on my thing. ¿Dónde está? Well, I'll just do it the other way then. You silly goose. What's up, Boston? I see you, brother. Happy 4th of July to you, sir. Let's see. We got Ethereum Whale withdrawals over $90 million worth of Ethereum from Binance in 1 month. So the question we should ask from this is, what are they doing? An Ethereum Whale moves money not just to move it. They move it. They like to move it for a reason, right? They're either testing liquidity. They're testing to see if the banks actually have the money they say they have. They're testing transaction fees, or they're positioning things to be able to sell them or whale the price in some direction, right? So let's take a look. An Ethereum Whale has been spotted withdrawing tens of millions of dollars worth of leading altcoin from crypto exchange Binance over the last month. Blockchain tracking firm Look On Chain reports that an Ethereum Whale has withdrawn 50,100 Ethereum, worth over $91 million from Binance since June 8th. This whale withdrew 8,500 ETH, or 16.3 million, from Binance again. The whale has withdrawn 50,100 Ethereum, or 91.2 million, from Binance since June 8th, and staked 34,560 ETH. So also they're staking this money. Interesting. So that's now proof of stake. So this whale thought it was a good idea to take Ethereum that was liquid on Binance, and they staked it on Ethereum nodes. So every 32 ETH makes a node, and so they made a lot of nodes. So Look On Chain also spotted another whale buying large amounts of Ethereum. This deep-pocketed investor also accumulated the decentralized stablecoin lending project CurveDAO and Ethereum liquid staking service Lido. A whale, probably this guy, this CZ Sam Sun SB.eth, bought Ethereum and CRV today. He borrowed 8 million from he borrowed 8 million USDC from AV and spent 6 million USDC to buy 3,115 ETH at 1926 bucks a pop. And he withdrew 1.83 million Curve, which is $1.41 million, and 1,222 ETH or 2.35 million from Binance. He also withdrew 143,533 Lido, worth about 300K from Binance, and spent 800 Ethereum or 1.42 million to buy a ton of Lido. Okay. So last week, Look on Chain tracked down a whale with a history of extremely clutch trades in the past, including selling Ethereum at a local top, trading USDC for ETH before it lost its dollar peg, and withdrawing all of its funds from the crypto exchange FTX right before the bankrupt centralized platform suspended user withdrawals. Well, that's convenient. A smart whale deposited 16 million USDC to Binance. The smart whale dumped 34,000 Ethereum or $65.4 million when the price was 1,930. Exchange USDC for ETH during the USDC depegging. I just don't like that word. Withdrew all assets from FTX before FTX suspended withdrawals. This guy has insider know. That's what this means. Interesting. And so with this same person having insider knowledge, so it seems, what do you think they're up to? Why do you think they took their money off of Binance and started staking it? To me, that says if that pattern continues, the same person probably has insider information saying Ethereum will not be considered a security, will be considered a commodity. And so they're staking it so they can make a lot of Ethereum in the times to come while the price is still really low, is kind of what this reads to me. So I don't think that's clear in the tea leaves, but let's just be clear that we should pay attention to things like this, just so we have a heads up and can act like Charlie from It's Always Sunny and just, start putting pins in boards and looking crazy. Like, well, actually, according to this information and this information, we could be that guy. So interesting to see what happens from Ethereum in the next few weeks and months. So as NASDAQ rises, led by Tesla, summer rally expectations increased in Bitcoin. Okay. So while the U.S. stock markets are making a flat entrance to the second half of the year, Bitcoin is protecting $30,000, so it seems. On the first trading day of the second half of the year, U.S. futures followed a flat mixed course. The markets that do not start the week with a certain trend will find their direction according to the data that will come during the week. Dow Jones is trading sideways. Don't sneeze. Okay. The Dow Jones is trading sideways with 0.07%, the S&P plus 0.08%, while the NASDAQ is trading at 0.35% premium, led by Tesla. It saw a 6% increase in pre-opening trading after Tesla announced that its electric vehicle sales over the weekend were above expectations. U.S. stock markets will remain open for half a day today and will be closed completely tomorrow for Independence Day. That's today, yeah. The fact that tomorrow is a holiday and there is no fresh catalyst kept the changes in the future markets to a minimum. While the expectations for the second half of the year are shaped by the moves from the Fed, Tom Lee, who has been in bull mode for a while, thinks the rise in the stock markets will continue. As Fundstrat head of research, Lee raises his target price on U.S. stock market. he thinks inflation will fall further in the second half of the year, helping us see a more dovish Fed. Bitcoin, which has experienced an increase of over 100% in 2023, has been continuing its horizontal movement above 30,000 for a while. While Bitcoin's strong defense of psychological limit of 30,000 encourages altcoins, the expectation of a summer rally is rising on the side of cryptocurrencies. And so what this is basically saying is that Bitcoin hit 30K. It's having a real hard time breaking above 31K. And when people saw that resistance, they're like, okay, fine. We're going to have Bitcoin go sideways for a while. We're going to throw our money into some altcoins and have a little, splish splash. I was taking a bath in the altcoin markets. And then once those profits are taken, they'll see if they can't whale Bitcoin a little bit to get people's confidence that the price is going to continue to go higher. But as you know, we have all of these SEC, Binance, Coinbase conversations happening right now that's giving people really cold feet. So, it's time to go ahead and get in the bath, baby. I'm gonna push you in. So, U.S. Federal Reserve certifies 57 companies to utilize FedNow instant payment system. So this is the CBDC pilot, FedNow. And, we've been talking about this on the channel that like this is coming down the pipe. Don't adopt this. When they try to push CBDCs to you, just get salty with them and say, we're not doing this, because what they're trying to do is get you reliant on a system that they can basically turn your money off if you don't comply with certain things. And that is a forfeiture of your own freedoms. Do not do that. Do not do that. FedNow, CBDCs, do not adopt them. These are forfeitures of your individual rights, and people will suffer if this is adopted. You need to hear that clearly. Okay. So let's read. In recent announcement, the U.S. Federal Reserve revealed that 57 companies have received certifications to utilize its upcoming instant payment system, FedNow, set to launch in late July. While an exact launch date was not provided, it is noteworthy that 41 banks and 15 service providers, including industry giants like JP Morgan Chase, Bank of New York Mellon, U.S. Bancorp, and Wells Fargo, have successfully completed formal testing and will be poised to offer instant payments once the service is operational. The introduction of FedNow marks a significant step forward in the evolution of the U.S. payment infrastructure. So just pause for a second. I agree this part needs to happen. ACH is crap. It's not a good system. It's slow. It's expensive. Instead, we should be using some new tech, but do not move to CBDCs. We can move to some other system that just has better tech that isn't us adopting CBDCs. With this system, individuals and businesses will have the ability to make instant payments, enabling faster and more efficient transactions. This is particularly crucial in today's fast-paced digital era, where speed and convenience are paramount. The certification process undertaken by the 57 companies ensures that they are equipped to leverage the capabilities of FedNow seamlessly. It involves comprehensive testing and validation to ensure compatibility and reliability. By successfully completing this process, these financial institutions and service providers have demonstrated their readiness to embrace the new system and deliver enhanced payment experiences to their customers. Among the certified entities are major players in the banking industry, such as JP Morgan Chase, Bank of New York Mellon, and US Bancorp, as well as Wells Fargo. Their inclusions underscore their commitments to staying at the forefront of technological advancements and meeting the evolving needs of their customers. So by integrating FedNow into the operations, these banks will be able to offer real-time payments, providing greater convenience and efficiency for individuals and businesses alike. The introduction of instant payments through FedNow will have far-reaching implications for various sectors of the economy. It will facilitate faster business-to-business transactions, streamline payment process for customers and consumers, and enhance overall economic efficiency. So if that's all it is, great. But for me, I can see through the veil, and frankly, I think this is actually infrastructure. Step one. Step two is get CBDCs integrated into the system. Look how easy it is to use, and now they got you on the hook, and they can turn the faucet off and spy on all your transactions even further than they already do. So I don't like this. Furthermore, it will likely foster innovation in the fintech space as companies explore new ways to leverage the instant payment capabilities offered by FedNow. While the exact launch date of FedNow remains undisclosed, the completion of formal testing by 41 banks and 15 service providers highlights progress being made toward its implementation. As the finance landscape continues to evolve, the introduction of FedNow represents a significant milestone in the modernization of the U.S. payment system, bringing us closer to a future where instant, secure, and efficient transactions are the norm. So again, if instant, secure, and efficient transaction infrastructure is all that's under the hood here, great. They're not going to stop there, is the thing. Oh, what's up, Just Bossy? Good morning. Yeah, happy Monday and happy Independence Day to you. It is the 4th of July, where we told the Brits to kick rocks. Although I still love the Brits, I don't love, people being told that they're subjects of, of a family. I don't like that. Anywho, here's our headline for the day. This is interesting. We're going to see more of this happening in the future, I think. AI generated fake news sparks rumors of Gary Gensler's resignation. So the rumors, which have set crypto Twitter ablaze, are the latest example of AI disinformation at work. So this is, I think, one of the biggest risks that AI poses, and I think this is what head of Google and Elon and tons of big brain people are like, dude, careful with this stuff. Like, you have no idea what you're doing. The fake news is crazy. Like, people are not going to know what is real or fake when it comes to political campaigns or news headlines. Like, the signal to noise ratio is going to get nuts, I'm telling you. So false rumors have again been spreading over the resignation of the United States Securities and Exchange Commission chair Harry Barry Gensler. This time, however, artificial intelligence has seemingly played a part. So on July 1st, a news story appeared on a website dubbed thecryptoalert.com, claiming the SEC chair Gary Gensler had submitted his resignation following an internal investigation, citing an anonymous official. However, Cointelegraph found the article's tech score high on the third-party AI detector, 0GPT, scoring 96.8%, signaling a high degree of AI text generation. The website also appears to be very new, with only 17 posts in total, the first of which appeared on June 22nd. Most of these articles also appear to make heavy use of artificial intelligence, with all articles scoring about 70% with 0GPT. So here's what it says. In a stunning revelation, an anonymous official from the Securities and Exchange Commission has reportedly disclosed that Gary Gensler, the chairman of the SEC, has submitted his resignation following an internal investigation. This bombshell news has sent shockwaves through the financial industry, raising concerns about the integrity of the regulatory body and the implications for investor confidence. The anonymous SEC official who spoke on the condition of anonymity due to the sensitive nature of the matter stated, Gary Gensler has resigned from his position as chairman of the SEC following an internal investigation into alleged misconduct. The details of the investigation are confidential, but the decision to step down underscores the seriousness of the findings. So that was AI generated, is what is being assumed here. In addition to the bulk of the text being AI generated, a search on Internet Archive Wayback Machine revealed that the ownership of the website's domain, thecryptoalert.com, was updated at 4:30 p.m. on June 24th. Despite this, a number of accounts reposted the content on Twitter like a bunch of shills. The most widely viewed post concerning the matter was from an account called Whale Chart, which has garnered 1.4 million views at the time of publication. In a July 3rd tweet, Fox Business reporter Charles Gasparino confirmed that Gary Gensler is not resigning after reportedly hearing back from the SEC. This isn't the first time rumors of Gensler's resignation have made the rounds. On April 20th, claims that Gensler was preparing to be fired were circulated by questionable sources. On June 12th, U.S. lawmakers introduced a new bill dubbed the SEC Stabilization Act to the House of Representatives. One of its main provisions sought to fire Gensler, calling him a tyrannical chairman. And really, honestly, this SEC Stabilization Act is smart. It's making it so people have to vote in a board to replace an individual chairman. So you basically have elected representatives on a board, which is way better than just a self-appointed chairman. So, that's pretty interesting if you ask me. Lo-fi anime hype, what up? I'll say what up to you. Happy Independence Day. So gotta watch out for this stuff. Don't believe everything you see on the internet. Abraham Lincoln. We live in an interesting world. Just test everything. Don't believe everything you see off the bat. Really try to rewire yourself to not be knee jerk, because it's really easy to just see something and just not read it and not do any research on it. Just post it like, hey, did you see this? And just proliferate fake news. So just be careful with that stuff, man. Be careful. Come on now. Interesting. You ever heard about World Mobile? So they say they're connecting the unconnected. So apparently, Mickey, Mr. Telecom Watkins, is a CEO at World Mobile, a mobile network owned by the people and built on blockchain technology. Mickey shares his background with telecommunications and his passion for connecting the underground. This is a podcast, but I do want to point this out that he understands the importance of internet access for undeserved communities. I think it's been, I'm reading this wrong, underserved. I was like, what? Undeserved? Underserved. And is focusing on providing connectivity. World Mobile started as a privacy-based platform, but shifted its focus to connecting the unconnected to address the fact that half of the world's population lacks proper internet access. And have you seen how smart some of these communities of young people are in countries like Niger and Uganda and Zambia? There's these dudes, they're like 10 years old, right? And they don't have a lot to begin with, but they're really resourceful. They find stuff people threw out typically, and they'll drill holes in it and build their own machines. And these guys are engineers just with the highest level of resourcefulness. So imagine you have great minds like this, and then you give them stable internet connections. You know how powerful that contribution to the global ecosystem might be? If these young men and women can get their hands on stable internet connections, they can get their hands on the education they need. They can get their hands on being able to let people know, hey, these are the prototypes we're building, and people can fund them. And this is really promising, honestly. Mickey explains how they set up an AirNode device in a remote village in Tanzania, which had a positive impact on the villagers' lives by improving communications and economic opportunities, as I'm talking about. They further explore the World Mobile's mission to connect unconnected regions using off-the-shelf hardware, proprietary technology, and sharing economy model that incentivizes individuals to host infrastructure. So this is kind of taking some things we've seen in the crypto space like Helium, but they're proliferating this to expand internet connectivity in areas of the world that just are underserved. So, man, I'm about this. I love this whole idea of a decentralized internet infrastructure. I think that's really cool. World Mobile, a mobile network provider, or a mobile network operator based on the blockchain. I'd love to see how they're based on the blockchain, what that part means, is expanding its sharing economy model to connect unconnected populations in various regions. They have successfully implemented their vision in Zanzibar and Pakistan and are now focusing on fine-tuning the sharing economy around the globe. By utilizing blockchain technology and smart contracts, World Mobile aims to reduce bureaucracy and ensure privacy for users. Love to hear that. They have developed different types of nodes, air nodes, earth nodes, and ether nodes to provide connectivity in rural areas and address gaps in coverage. World Mobile's goal is to connect 1 billion people by 2030. That's a nice goal through its sharing economy approach. So if you're interested in partnering with them or figuring out if this is something you should partner with, check out World Mobile, because what I'm hearing from that is something I like quite a bit. I think that's really cool stuff. And yeah, if you want to bookmark this, I'll throw this in the chat here. There's a full podcast interviewing this gentleman, Mickey Watkins. So check that out after the stream. Let's talk about Binance. Okay, Binance suffers a fresh blow. What is with this piss color background? I don't understand. Let's see if I have. No, I don't have that. That's right. Binance suffers fresh blow as it loses key banking partner. Binance confirmed the news and stated it would be changing its banking provider for euro deposits and withdrawals through the single euro payments area. PaySafe Payment Solutions, the European banking partner of Binance, announced on Thursday it will no longer offer its embedded wallet solution to the U.S. cryptocurrency exchange across the European Economic Area starting from September 25th. In an email to Reuters, PaySafe stated that they are working with Binance to implement a fair and orderly process to terminate this service over the next few months. Binance confirmed the news and stated it would be changing its banking provider for euro deposits and withdrawals through the single euro payment area, but no specific details about the new partner were disclosed. A spokesperson from Binance mentioned that more information will be provided at a later time. Typically, Binance accesses SEPA through payment intermediaries. However, the spokesperson assured that during this transaction, all methods of depositing and withdrawing other fiat currencies, as well as buying and selling cryptocurrencies on Binance, will remain unaffected. So you hear that? All methods of depositing and withdrawing other fiat currencies, as well as anything with cryptocurrencies on Binance.com. That's not the US one. That's the one we're not allowed to get on because of the IRS. Will remain unaffected. PaySafe's decision to end its wallet solution comes at a time when Binance is under scrutiny from regulators who are aiming to crack down on money laundering. Oh no. In recent developments, Binance and its U.S. affiliate reached an agreement with Securities and Exchange Commission to ensure that customers' assets in the United States remain with the country until the resolution of the comprehensive lawsuit filed by the regulatory agency. Last year, Binance partnered with PaySafe to enable its users to deposit sterling via Faster Payments, a network responsible for overseeing payments and bank account transfers in Britain. In summary, PaySafe Payment Solutions will no longer offer its embedded wallet solution to Binance across the European Economic Area. Binance will seek a new banking provider for euro transactions through SEPA. However, the change will not impact other deposits and withdrawal methods or the trading of cryptocurrencies on Binance.com. So this is not FUD for crypto, is what this means. PaySafe's decision coincides with increased regulatory scrutiny faced by Binance, and the company has also resolved an agreement with the SEC regarding the customer assets in the United States. So I think this could have been FUD, fear, uncertainty, and doubt for Binance and crypto, but it looks like it's not a big deal. They're just changing some regulatory relationships just to make sure that they get euro on board and on ramp and off ramp sorted out. So no worries here. Although I will say cryptointelligence.co.uk needs to change the background from piss brown to, I don't know, something that isn't so unsightly. That's rude. Quite rude. I saw this really good meme. I think I shared it in our Discord, but there was an era in gaming. I don't know if you remember this, where like every game had this like piss filter on it. It was just like I'll see if I can pull it up real quick because my ADHD thinks it's funny, and it's a gift I have. It's a gift, and every once in a while we do need a meme. It's only right. It's healthy. It's healthy for us to do memes. Wow, I really didn't post it on there. I'm rude. I'm out of pocket here. Look, I gotta treat you right here. I didn't treat you right with it. I need to get you right. I'm gonna do it right now. And if you know, I'll show this to you and you'll be like, yeah, it's funny. Like, I know it's funny. Look at this. This is like the piss filter era of video games. That's real though. Look at this. You got GTA 4, you got Gears of War. What's this game here? I don't know what that is. But seriously, every game had this like piss filter on it. That's what this web page over here looks like to me. This like, I clicked on the wrong stuff. Forgive me. Forgive me now. Forgive me. Hope you will. Look at that. It's the same thing. It's that color. It's just it's all right. It's all right. It's all right. Let's go. So $46 billion, almost $47 billion, enters the U.S. banking system in 1 week as banks deploy an expensive fix for deposit flight. Speaking of money laundering, let's talk about this. Nearly $47 billion has entered the U.S. banking system in just 1 week as banks deploy new strategies to bring customers back. Depositors added exactly $46.95 billion to the American bank accounts in weeks ending June 21st, according to new stats compiled by the Federal Reserve Economic Data, or FRED, system. Multi-billion-dollar jump is thanks in part to new strategies designed to reverse deposit flight, reports Bloomberg. Regions banks are borrowing an eye-popping amount of cash from the Federal Reserve and are also relying on third-party broker deposits compiled by little-known intermediaries to boost their bottom line. And although the strategy may be boosting deposits, it will be costly in the long run. An analysis of quarterly regulatory filings for the 84 biggest banks shows not only how much they were borrowing through the channels at the end of March, but also the toll that it was just starting to take on some of their earnings. Those rising costs threaten to turn the most strained banks upside down, leaving them paying more to amass the cash they need than the earning by lending it out. That's not good business, guys. I don't know what the game plan is there. That's goofy. The surge in brokered deposits is most visible at the Los Angeles-based PacWest Bancorp, which recorded 1,774% increase in quarterly brokered deposits compared to earlier. In addition to their expensive acquisition costs, broker deposits are often referred to as hot money because they generally don't sit in bank accounts as long as deposits that are acquired organically. In total, the amount of deposits in the U.S. bank now stands at $17.34 trillion. Although that number is up in the last week, it is significantly lower than the $18.10 trillion figure from 1 year ago. So what's their game plan here? Like, I suppose my question is, they put this much money into banks. Was this just minted? Did they just increase or inflate the US dollar by this number just to stuff the banks with that? That's what I want to know, because that's what I'm interpreting from this. And if that's the case, I'd love to understand this. Like, how come we, as people who are expected to use the dollar, get no say in whether it gets inflated or deflated? Like, I don't understand that part. We partake 0% in the governance of the US dollar. But there's a component here that's confusing to me. So like they talk so much about money laundering and why that's wrong, and yet they can, without our permission, increase the amount of money supply or decrease it. Like, help me understand how that isn't similar in pattern to money laundering. Like, help me understand it. 'Cause I don't like what I'm seeing. I don't like it. And I told you we had some news on Solana here. Let's read this. How Solana plans to take on the DeFi sector with Firedancer. A new validator client could improve Solana's DeFi state. Stakers remain optimistic about Solana's future. So let's read here. Wow, and this is the new Tesla right here, and all of these are apartment buildings that you can pay. They actually accept human blood supply, so it's pretty cool for payment. You know, you just hook your blood into it, and that's how you pay your rent. Pretty neat. Over the past few years, Solana has experienced its fair share of ups and downs. The network has faced multiple downtimes. Yeah. And more recently, SEC classification of Solana as security has also posed setbacks. So SEC did classify Solana as a security. It seems a new client to smooth things over. However, a new validator client could soon improve the state of Solana going forward. According to Masari's data, Firedancer, an independent validator client built by Jump, could make things better, at least on the DeFi front. The data suggests that Firedancer can enhance DeFi maturity by reducing latency times, thereby bringing decentralized exchanges closer to parity with centralized exchanges. So, by reducing latency times, Firedancer can enable fast transaction processing, which can improve the overall user experience and attract more participants to the network. This increased efficiency can potentially enhance the scalability and usability of decentralized applications built on Solana. Furthermore, the closer proximity of decentralized exchange to centralized exchange parity brings several advantages. It allows for seamless trading experiences for users, as they can enjoy similar levels of speed and liquidity as offered by centralized exchanges. This can boost liquidity on decentralized exchanges and attract more traders to participate, thereby expanding the ecosystem by fostering greater adoption of Solana-based DeFi protocol. My mustache is itchy. Why? We're okay. State of DeFi. However, at press time, the TVL of Solana had declined massively over the last few months, according to Artemis data. TVL fell from 295 million to 266 million since April. This could be attributed partially to the low DEX volumes exhibited on the Solana network. Even though DEX volumes were low for the majority of the year, an uptick in this metric was observed over the last few weeks. This uptick caused a slight surge in Solana's TVL as well. Only time will tell whether Solana can manage to keep up these numbers and maintain sustained growth in the future. Coming to stakers, it was observed they will remain positive towards Solana and continue to support the network, according to staking rewards data. The Solana network was the second most popular network amongst stakers after Ethereum. At press time, it appeared that along with stakers, investors also continued to show their support for SOL as its price witnessed growth over the last few days. Coupled with a spike in price, there was also a surge in volume observed for Solana. So it seems that like this type of news here has basically created a little bit of positive news on and confidence in Solana. So that's why we saw the price move up a bit. You know, we were, I don't know what the hell that view is. There you go. There you go. You know, we saw this like 13.4% on Solana here. I think that was attributed to the confidence that Solana will at least still have a relevant space in DeFi. So that's cool. I like that a lot. Cool to see development continue despite FUD and bear markets, right? So Bitcoin miners are pivoting to new markets and making bank. With a pivot to provide high performance computing, miners are finding new ways to broaden their revenue streams. I mean, this, and I don't know if this is Bitcoin miners. This isn't Bitcoin miners. Bitcoin miners use ASICs. This is talking about GPU. This is not the same. Avi Fellman says he's bullish on Bitcoin miners, but not strictly because of Bitcoin's potential. With a pivot of providing high performance computing or HPC. Oh, what's up, Indo? You know, I got to say what's up to my boy. What up, DCTV fams? Happy Monday. Happy Independence Day to you, Mr. Indo Crypto. You'll rewatch the show. Yeah, we got some good stories in here, my guy. Hopefully you're grilling and chilling today. So with a pivot to providing high performance computing or HPC, companies are finding new ways to broaden their revenue streams beyond ASIC mining. Hut 8, best known as Bitcoin mining company with facilities in Alberta, Canada, and Texas, is a great example, he says, thanks to its high capacity computing infrastructure. Hut 8 recently signed a contract to provide high performance computing for clients in Canada's health sector. And all this means is they're basically offering some GPUs that can do like basically AI number crunching. And so it's doing AI number crunching so that they can run through artificial intelligence models is how this works. If you want to look up some examples of these types of cards, look up like the NVIDIA A40, look up the NVIDIA like RTX 6000, RTX 8000. Those are high performance computing cards. So on a recent 1000X podcast, the head of digital asset trading at Golden Tree talks to Cumberland's global head of trading, Jonah Van Borg. That sounds like a villain, but it's probably not. We're good. About broadening revenue strategy. It's not about the hardware. With the growing potential for more cash flow, one might expect mining companies to pack up their ASICs for greener pastures, leaving their precarious business of crypto mining and its knife edge profit margins behind. But it's not about the chips, Fellman says. It's a completely different business. It's more about access to facilities and people who know the business, Fellman says. Cooling, for example, is important in any high capacity computing environment, he says, in both Bitcoin mining and high performance computing. They have all of that set up. They have people that know how to build out those services. They have these warehouses, these facilities, they have power contracts. The actual product that is provided to the clients, Fellman explains, is radically different and requires a decent amount of upfront investment, but the overall operations are very similar, he says. Large-scale mining companies like Hut 8, Iris Energy, Hive, and Cypher can repurpose facilities to provide high-performance computing, diversifying the business and generating more revenue, Fellman says. It seems like there's a tremendous amount of demand. Healthier Bitcoin market to boot. Fellman clarifies that current ASIC hardware, highly specialized computers designed strictly for Bitcoin mining, cannot be diverted for the purpose, thank you for saying that, of high performance computers to clients, but the diversification of services provided through the infrastructure and know-how could enable mining companies to be financially healthier, he says. So basically what he's saying is, look, you have a team who knows how to keep computers cool. You have a team that understands how to get big power purchase agreements. They understand how to get their hands on hardware from vendors, connect it, and get them configured properly. And so all of that is very, very similar on both the Bitcoin mining side and with high performance computing. And so really high performance computing, there's got to be some software dashboard where people can basically point their work instructions to specific high performance computers or nodes, and that will do the work they're asking. You know, that will basically train on a whole bunch of images to be able to generate other types of images based on those relationships. It can run through a whole bunch of examples of some stick figure trying to bowl to see how long it takes for that stick figure to optimize the bowling methodology. And the whole, you know, the whole concept of machine learning is really, you're having this model you build, run through every possible configuration, and then filter it by desirable outcome parameters. And so you can say, oh, apparently if I arch my back, I'll get a bigger bench press. Yeah, that's true. It'll find those sorts of optimizations out, right? So a lot of businesses can benefit from this type of work. The move could also benefit the market price of Bitcoin, he argues, because miners may be less pressured to. That's a good point. Maybe less pressured to sell in fearful markets. The need for mining companies to sell their fresh Bitcoin on a regular basis just to survive acts as a constant damper on prices. That's true. Miners will get liquidated less often as they become better and more robust businesses. Van Borg adds, it would make the market healthier for sure. It would also tell the world, he says, crypto has provided a series of infrastructure plays that are relevant outside of just crypto. So the move indicates the presence of a growing market for purpose-specific computation facilities. Really, that's astute. This is really the big idea here. Purpose-specific, not application-specific, purpose-specific. Van Borg says Bitcoin mining technology, he says, laid the rails for other applications that can now harness the technology in new ways. So for everyone who's taken shots at Bitcoin for, being a power suck and all this, they don't know what they're talking about. And honestly, a good Bitcoin miner will do a barbell strategy, right? They will have Bitcoin as like maybe the risky thing they do, and they'll do something else with their facilities to make money that's more tried and true and safe. So depending where you're at, you might be doing high performance computing. You may, be doing data center hosting. There's a lot of different things you can do, right? Sorry, I had a brain glitch there. No joke. So that's our stories for the day. I hope everyone enjoyed this. We here on Crypto and Coffee, what we do, we aspire to bring you the most relevant stories, keep you informed. And I'm going to leave you with a silly song that I wrote with one of the homies from Bitcoin Pub back in the day. Hope you like it. This is kind of a trap track, so look, I don't mean to be rude, but this is kind of going to go hard. Like, it's kind of going to go hard. You don't know. You don't even know. You don't even know. You're going to know. You're about to know. And, here we go. You're about to find out.
Let them know. You down straight, boy. Learn about money from Austrians. House of cards playing bullshit. Run the numbers called bullshit. Money fake like Judas. Don't trust the few that are loaded. We know the debt, but what supply? Observation with solution. Little bank, eat big bank. At least call that a nuisance. 100 mil, that's divisible. Don't need a bank to verify. Short squeeze that it can't stop. Encrypted keys, call that day watch. Can't stop the game like GameStop. Need away from running the government. Don't need to occupy Wall Street. Stack sats, opt out. Not speaking loosely. This is really that no cheese. One classic, control by acid, can print the money but still pay taxes, control the assets, control the masses, money debates and asses, inflating, still a slave to a paycheck, money diminishes, prices rise for a basic living, the great divide, odds on the prize like eagle eyes, see the lies, so be advised, stack sats, satoshis, stacking sats, satoshis, paper money that's phony, prices so wholesale, stack a hole just on sale, making money like oh well, stack sats, satoshis, stacking sats, satoshis, make for with your own feet, stack sats, satoshis, I've never that OGs, stack sats, satoshis, make for with your own feet, stack sats, satoshis, I've never that OGs, stacking sats, satoshis, make for with your own feet, stack sats, satoshis, I've never that OGs, stack sats, satoshis, make for with your own feet. Second set Satoshis, opting out of that OGs. Second set Satoshis, printing more paper than all the trees. Stack sats, Satoshis. This they got a money monopoly. Stocks is not the economy. Incentives, don't lie. Greed, tragic, fix the money, fix the world. Incentives realign, don't trust, we verify. God's watching an evil eye. If shit free, then you the clientele. Ain't shit online, that's not for sale. Social, DOB, credit cards, history used for product sales. Your info used for fucking ads. That's a power grab, what the fuck is that? Still waiting more money from Equifax. Beef of vendetta, but we're all Satoshi, no CO. No doors are kick, no sales scene. This is not a scam. Weapon the states that go ham. Politicians, they politicking. When the votes got tunnel vision. Easy win with some pandering. Easy money when you got a printer. Easy money that's not yours, that's not mine. It's your kin money. Down the line, time is money. Printing money is still on time. Kill George Ford or a fake 20 when the counterfeit all the damn time. 2% inflation based on the CPI, but created 22% of the money supply. In the same year at the same damn time. That's why I stack sats, Satoshis. Second set Satoshis. Paper money that's phony. Second set Satoshis. Make vote your own feet. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Make vote your own feet. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Make vote your own feet. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Make vote your own feet. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Printing more paper than all the trees. Stack sats, Satoshis. Prices so wholesale. Second hold just on sale. Making money like oh well. Stack sats, Satoshis. Second set Satoshis. Printing more paper than all the trees. Stack sats, Satoshis. Not against the stimulus. That's second set. Subsidized. Elite funds that subsidize. Fuck the bullshit. Going back on time. Put in work, yeah, did the time. Government don't even have the crime. Just look at what's subsidized. Fiat money from endless wars, that's straight there. 50-year war on drugs, incarceration with discrimination. Police force, militarized. Middle East was occupied to sell oil and US dollars. Show the side, then they changed that. And trusting motherfuckers with all that guap. Nah, fuck that. Stack sats and don't give these motherfuckers all that power back. You down straight, boy. Stack sats, Satoshis. Make vote with your own. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Make vote your own feet. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Make vote your own feet. Second set Satoshis. Opting out of that OGs. Second set Satoshis. Second set Satoshis. Second set Satoshis. Second set Satoshis.